Morning. Today's date is Monday, July 10th, 2023. If you are an existing client of Capital Consulting Group, would you please save the date for Tuesday, August 22nd for our next Capital Cruise Client Appreciation Dinner. Once again, we will be on Lake Minnetonka and we look forward to celebrating you. So please mark your calendar and watch for a more formal invitation. With that, I'm going to roll today's intro and then we'll take a closer look at what is going on in the markets. We've got a lot to look at as the third quarter gets underway. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. Rising concerns about further rate hikes sent stocks lower to kick off the second half of trading last week. The Dow Jones Industrials Average lost 1.96%, while the Standard & Poor's 500 retreated 1.16%. The NASDAQ Composite Index surrendered 0.92% for the week, and the MSCI EAFE Index, which tracks developed overseas stock markets, tumbled 2.57%. Stocks were dragged lower last week by news reigniting fears of additional rate increases. It started with the minutes from June's Federal Open Market Committee meeting, which revealed a majority of voting members supported at least two more rate hikes. But a strong employment report from Automated Data Processing, or ADP, they are a payroll processor, unnerved investors, sending stocks lower and bond yields higher. Markets stabilized after Friday morning's federal government's monthly employment release showed a less than expected increase in non-farm payrolls, but stock prices turned down in the afternoon, adding to the week's losses. Wall Street was rattled by an unexpected surge in new private sector jobs last Thursday. ADP reported private sector employers had added 497,000 jobs in June, blowing away the consensus estimate of 220,000. Leisure and hospitality led the gains with 232,000 new hires, followed by construction at 97,000. Friday's release of monthly employment data painted a more moderate picture, with 209,000 new jobs added in June, well below the estimate of 240,000, and May's downwardly revised total of 306,000. Friday's report added to data released earlier in the week, a decline in job openings and a rise in jobless claims that suggested that the labor market may be cooling. So a question that many people have been asking recently, and it has to, on the screen here, and it has to do with one of the more challenging parts of the economy, and that is gauging what's happening in the jobs market. As you probably already have gathered, it's a very confusing thing that we're looking at. So one July report showed the private sector adding nearly 500,000 jobs, doubling the expectations. Meanwhile, another July report showed that job openings fell by 500,000, also above expectations. And in explaining why the Fed may boost interest rates again this year, 2023, Fed Chair Powell said what's really driving it is a very strong labor market. So let's take a look at a chart that might help us understand what's going on here. This chart shows why the Fed struggles to understand what's happening with today's job market. And as you can see, the number of self-employed people rose to an all-time high during COVID, but now it's falling at a rapid pace. What's causing the drop? More people appear to be returning to work at 9-to-5 jobs, perhaps fearful that the economy might collapse into a recession. When economic growth slows, perceptions may hold that 9-to-5 jobs may seem more secure. You see, the Fed has several mandates, including managing the nation's monetary policy to promote stable prices and maximum employment. Sometimes those two jobs can conflict with one another. If you raise rates too high and economic growth slows in response, higher unemployment may be the outcome. Don't raise rates enough, and inflation can raise prices. Add in the twist of how COVID influenced the jobs market, and you can see why the Fed may be scratching its head a bit with interest rates. One of my favorite sayings is, don't worry about the horse, just load the wagon. In this instance, perhaps a more accurate saying would be, don't worry about the Fed, just focus on the investment strategy that we created. And that brings me to smartmixportfolios.com. For details into how we manage investments, you can visit smartmixportfolios.com. Each month, at the very beginning of the month, I update detailed reports on each of our primary strategies. And you can view them by, again, going to smartmixportfolios.com, scrolling down to those strategies and clicking on each strategy itself. You'll get a PDF report for each strategy. What makes SmartMix smart is that we will take the time to customize a unique mix for every account that we manage. So again, here's all the different strategies at smartmixportfolios.com. If you just go down, click on any one of the names here, you'll get a detailed report, kind of like this report right here. This is our wide moat strategy, our most common strategy that we're using, having a wonderful year, substantially outperforming the market. So if you want details on that, go over again to smartmixportfolios.com, click on that name, and you'll get a report that looks just like this. Then moving forward, we continue to keep our finger on the pulse of what's happening, and we will automatically update your managed accounts for you as we feel are in your best interests. And as I said, the big economic data that we're watching this week is CPI. On Wednesday, we also have the PPI, or Producer Price Index, and jobless claims on Thursday, as well as consumer sentiment on Friday. And then we do have a number of companies reporting earnings this week. Thursday, Delta, Friday, some banks, amongst some others. So again, if we are not investing your life savings for you, you can learn about our personalized approach at smartmixportfolios.com. All right, that's it for today. Thank you for staying until the end. I have another riddle for you. Again, be the first person to post the correct answer down below this video in the comments section, and we will send you a gift card for coffee on us. All right, today's riddle is, what lives above a star but never burns, has 11 neighbors, and can replace the letters P, Q, R, or S in some cases? Again, be the first person to post the correct answer down below this video in the comments section, and we will send you a gift card for coffee on us. If you would like the answers to previous week's riddles, you can go to our website /riddles for those answers. And then lastly, later on today, I will be sending out our full economic update for the week. This update includes more than what we talked about here just this morning, including our popular tax tip. This week's tip is a tip on how seniors can get their tax return prepared for free. So if you are a senior, or you have a senior friend, family member that you care about, want them to get that tip, be sure to check that out. If you like this email and you're not getting it, you may subscribe at our website, www.investwithccg.com. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves, and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.